All right. So continuing to track the markets as I share my swing trading positions with you and my outlook. So we always pick up from where we left off in the last video, which was we were bearish, right? As I had shared the information, I sold here in a position that I was going to hold, at least a couple of weeks as predicted. Train arrived on schedule. We moved down and we really hit some volume here to stop the progress. We lost our lower lows, lower highs trend. We went into a bit of accumulation, and that's our signal to start taking some profit, which is mainly comes down to the high volume stopping the progress, right? Refer to my other videos to learn that stuff. But again, with the swing trading, I'm keeping it really simple with the volume and really seeing these high volume points and the reaction and identifying the phase. And that would be accumulation by definition, and time to cover, get out of those short positions. So that's what I did. I started working my way out, and now I'm completely out. And I started buying after yesterday. So let's update this. Cautiously buying, starting to build a position. Again, I'm starting from scratch pretty much. Here, I completely closed any longs. And, like I said in the last video, it was all bearish. So now I'm building up, right, and starting to buy again, right? If we go lower, I can buy more. If we move up, then I'll be looking for profit areas on what I'm buying here. So started buying on this day, yesterday. Again, it's the high volume news is the first Friday every month, the numbers that come out. And so that can very often be, not always, a direction changer, and a lot of activity goes on, and that's what we kind of need to get this going. But so far, we like the reaction to accept these higher prices very easily. And so cautiously building longs. Let's update the whole situation. Yeah, let's do that. Let's just do that. Remove drawings. Can I? Yeah. See, this is different on my phone. That's why I mess up when I'm doing the video. Okay. If we're buying, what are we talking about here, right? Buy areas. And if we do go lower, continuing to see strength coming in, high volume, stopping the lower prices, to put it simply. Some levels, right? I'm being cautious, saying if we dip lower, right, we want to be ready for that as well. So what's down here, and what are some other buy areas if we get another dip? Now, there's not much supply coming in, and if there's not, then there's not. But just to be prepared, this would wipe out a lot of premature long positions, get, fake breakout there. This, just to really be a little more thorough. I don't expect that unless, again, we start to see some large supply selling coming in again. But just to see what's back here, what levels we're at. Get the chart updated. This, we've already broke through that fib. Obviously, that was from the last video. This is completely legit here. So we're actually, okay. Yeah, that makes sense. 618 overshoot. Okay. So that might be the low. Yeah, that adds to the probability, right? And again, you see all that volume coming in right in there, that we are going to get some sort of bounce here. And if we just bounce to the top, right, that's a good trade. Once again, wrote it down, ride it back up to some of these levels. As far as where I would be looking to see supply coming in, high volume wise, and look to take profit in these areas. So that sort of stuff. But I wouldn't be surprised if we do one more dip. It's kind of 50-50 because there's a lot of volume leading to an up move without a lot of supply coming in. So we may just go accumulation into markup, go, right? If we do another dip, fake break there. And again, I would have to see strength coming in, high volume demand coming in, and I could add to my position or not or whatever, right? So that is the plan. Cautiously now building the long positions on that. That's the DOW. What else we want to look at? Generally, as I said in the last video, right? We're continuing always so you could track. Generally, I was out, and bearish, and out of long positions, and this was the short that I had taken to to profit off the down move. But generally, I'm thinned out. Silver, we talked about that actually in the Discord where I bought here, and then we had a huge sign of weakness. So I said, I'm out. I don't want to be on the wrong side of a big move. And that's exactly what I would have been in. That was a swing trade cut short real quick. So if you saw in the Discord, it was really nice, and it just took off as soon as I got in. But the chart spoke and said supply, large supply. 1 hour really shows that. And I got out of those long positions. Good thing I did. Listen to the chart. We did come down to what I had drawn before. And again, this is from the last video there, right? I think so. But we already see that 618 overshoot accumulation style, right? And then there's a correlation here. And then the news Friday, and then the up move, right? So again, you see this, right? The bottoms, the high volume. Is it really high? Is it really convincing we're bullish? There may have been a little, hesitancy to buy here at a usual place and a usual pattern. But again, the news, and it's really high volume on the 1 hour chart there, that news and the outcome of that kind of maybe set the direction now that we are able to move up. Let's see the 1 hour really quick on that. So there. So we'll see. A bit of accumulation back here. It's just enough to say, okay, we're bullish. Let me start building positions, but be cautious. Take my time with it, getting those longs back in there. But that's the story generally. So we're looking at oil, same deal. All right, everything correlated the down move as forecasted. We see in this case a more bullish pattern here. Right, you guys all know this stuff of the accumulation with the fake breakout on high volume leading to going from accumulation to markup. That is textbook right there. Maybe a situation in the Middle East may add to what goes on a bullish side here. But that was before, wasn't it? Yeah, surprise. So now we've jumped into markup, basically. We're accepting the higher prices, and we're expecting this pattern to continue to trend, do a couple of waves up. Again, I started working my way into these things generally yesterday, Monday the 9th. So again, building the long positions, right? The correlation is there, very much so, very clean. So I don't have to really run through everything and repeat it over and over again. And again, if it moves up, I'll have some areas of see supply selling coming in to start taking profit. If it moves down and I see demand, I'll continue to build up long positions, maybe get some better prices, shake out some of these, buyers, take it from them at a low price. So that is the plan. I think that kind of covers it again because of the correlation. Have we looked at cryptos? Cryptos have that weakness in the background. Bitcoin, it hits some selling back there. Not a ton. And then we're kind of in a really bad reaccumulation that's not that clean. It's kind of flat. There's not much to say. I'm holding what I'm holding. If it moves down, look for strength. If it moves up, look for weakness and sell. Is it going to break that old high off of this amount of... The question is, can it continue through the high now off of this type of accumulation activity? Is it likely? See the supply here, supply, right? And then demand here. A lot of activity leading nowhere. There's a lot of balance. The supply demand is in balance, and now we're kind of floating towards the middle of this range. So supply demand balance going on. We need a little shakeup. So it's kind of flat for now, but otherwise, and that's cryptos generally. But otherwise, the other analysis applies generally to things because of the correlation. Here's gold, right? It's going to be the same story. So there you have it. We'll continue to track the markets. What else? Join the Discord, hit the like, hit the subscribe. My courses are available still. I'll put the link in the description. And I'll see you on the next one. Keep tracking the markets.